man. So the following is a conversation with Rob from Digital Asset News. Rob is a content creator, crypto investor, and somebody who is a huge pragmatist with great sound anti-moonboy advice on his channel. You're not going to want to miss this sit down. We cover on various things, including whether we are heading for a bottom here on crypto, and more importantly, how to navigate this tricky market we're in. If you appreciate this type of content, smash the likes, don't forget to subscribe, and let's get straight into it. Hey, Rob, how are you doing, buddy?
Good. How's everything over there?
Yeah, not bad here in the UK. It's the winter nights have started, so it's nice and gloomy from early. First of all, thank you so much for making time to jump on the channel. I've been a big fan. You probably don't know this, but I've been watching your channel for a very long time, and it's great that you finally were able to connect with me and jump on. So yeah, thank you for jumping on.
Yeah, thanks for watching every so often. I appreciate it.
Cool. And the reason I wanted to connect with you specifically was one of the reasons I started making content in the traditional finance space, and my audience know I have a background in traditional finance, was the abundance of moon boys in the space, right? You know this. You start searching crypto stuff, and the first thing you're going to see are these boys playing hugely leveraged trades. So it was hugely refreshing at the time when I was starting out to see the likes of your content and Invest Answers content really digging into the important things in the space. So that's really what resonated with me. It'd be great if we could share some of those nuggets with the audience today. So why don't you go ahead, introduce yourself to those that aren't familiar with you. I'm pretty sure everybody is, unless they're living under a rock. And then obviously just kind of give us an intro into how you got started in crypto, if that's all right.
Sure. My name is Rob, and I host Digital Asset News. It's a YouTube channel that's been around for a couple of years now. We started in 2020, and I started investing into crypto in 2017. And I actually had an opportunity to invest into Bitcoin in 2012. My son came home and he said, hey, there's a guy at school and he's selling this hard drive with 500 Bitcoins on it for $500. And I said, yeah, that's awesome. What is that? What is a Bitcoin? And, just like everybody else, when they first try to figure out what Bitcoin is, he tried to tell me, and I was like, Alan, doesn't make any sense. I don't know what you're talking about. That idea will never work. That's the dumbest thing I've ever heard in my life. So fast forward to 2017, when everybody started to FOMO, I go, I remember this thing that I heard about called Bitcoin, and it started to go up and up and up, and I started to invest. And of course, I thought I was the best investor of all time, and it went all the way. I rode it all the way up and all the way back down. And then in February or March 2018, I told my wife, I go, look, here's the options. I can sell everything at a massive loss, 85 to 95%, depending on which coins we're talking about. Or I can do this thing called dollar cost average and write it out, because I think that these cycles are natural. And I think that we will bounce back. So for the next 2 or 3 years, I just dollar cost average into the basics, the Bitcoins, the Ethereums, the Chainlinks, the Cardanos, and just stuck around. And here we are today. So I started the channel in 2020 because, frankly, my family and friends were getting sick of me talking about it to them. So I had to talk to somebody. And now here everybody is.
That's why we're all here.
Exactly.
And really interesting story. So at the time, because it's very cognizant to what we're seeing now, right? It's the same pattern we're seeing right now. A lot of people sitting on 80+% retracements, depending on what coins they're sat on. Looking back, what gave you the conviction? This is a common theme on the channel. What gave you the conviction to not only just hold and not panic sell, but actually take the strategy to dollar cost average in and literally double down with your money? What helped you through that period looking back?
So there's a great book called The Intelligent Investor. And if you can take a look at that, and it just kind of goes through, it just talks about there are bear cycles, there are bull cycles, there is a natural progression that goes around. And I took a look at it and I said, this is the same thing that's been going on forever. I mean, I was around in 2007, 8, and 9 when there was a housing market crash. And at that point, everybody thought it was just going to be game over, and that was it. And that's actually when, I made a good amount of money just investing into distressed assets. And I thought it was the same thing here. The thing that I screwed up on, well, I screwed up on many things. Ask my wife, she'll tell you. But the things that I messed up on was, first of all, I heard the message, and like we just talked about, the Moon Boys and the diamond handers and the people who say you never sell. And I'm like, yeah, that's right. And then as time went on, I'm like, wait a second, doesn't make sense. Because at some point, even though this technology is fantastic, and we talk about Bitcoin and how it could be, first it was a currency, then it was a hedge against inflation. Now it's a store of value. It might be gold 2.0. It doesn't really matter, but the whole narrative just kind of goes across that arc. Once we figure out what it is, that's fine. But right now, I don't care what anybody says. For the whole or most of the crypto market, we're doing nothing but speculation because there's no real massive killer app that's out there right now. There will be, I just don't think it is. So when I took a look at this, the conviction came from just being through other financial crises. And then also, I remember in the dot-com bubble burst. I wasn't an investor back then. I was still in the military. And I was like, well, good, I didn't invest into that. But as time went on, you can just kind of see it, like the dot-com crash. Then you see the Amazons and the Googles and even the Facebooks get out of that. And you see the crash of the housing market. And you say, what the heck happened? Well, the ones that made a bunch of money were the ones that just sat back and just go, it'll come back. And it did. They bought low and they sold high. And now I think it's the same thing in 2017, or when 2017 came about, and then in 2021. And we're going to see it again, hopefully in 2025, or it could be longer. I'm not for sure.
Really, really good insight. And I guess the point you're making there is you don't necessarily have to have been through the cycles to learn from other people's mistakes. So if you're new to crypto and you happen to be walking in during this bear market, or you happen to find yourself in a huge retracement because you bought in November last year, you don't need to panic. You can go and read about the stock market. You can read about the dot-com bubbles. You can read about how, these bull and bear cycles kind of come into fruition. So yeah, really interesting point. And what was the book you referred to as the Intelligent Investor, right? Was it Benjamin Graham?
Yeah, that's the one.
That's the one. Got it.
It's like a required reading, I think, for most people.
Got it. Cool. So kind of moving along then. So in this kind of a market, so you mentioned your dollar cost averaging in. Do you have a specific formula for doing so? Because I know from our community, one of the things I've mentioned to the community over recent times is when we're this super retrace, I don't know if this is right or wrong, I personally decide to focus more on Bitcoin, Ethereum. I kind of let the altcoins kind of disappear slightly. I'm happy to buy them a little bit more expensive. What's your game plan? Because obviously everybody's got their own.
We do this. It's a great question. To start off with, as far as dollar cost averaging. Yeah. So I don't think we're at the bottom. And a lot of people do think we're at the bottom, and that's fine. I think we've got a little bit more pain to go, but I could be wrong. So what I do is I look at the market, and I try to be more conservative these days and go, okay, look, if I would originally put $100 per day into Bitcoin, now I'm doing what's called micro DCAing, because I'm just kind of waiting just to see what happens. And I'm putting in roughly 25% of that original number. And then what I do is I take a look at a couple different factors. There's a great website. It's called lookintobitcoin.com. It is 100% free. It has some really fantastic pieces of data and charts that you can take a look at. And when you take a look at it, I take a look at a couple different ones. One is the NUPL, the net unrealized profit and loss. I take a look at the MVRV Z-score and a couple other ones, but those are the two main ones. When I take a look at it, I just kind of see, because it'll tell you kind of where things are bottoming and where things are really distressed assets. In general, and then where things are super highly overheated, where you might want to consider to, take some profits. And again, what I'm talking about here is not investment advice, just the things that I do. Don't do what I do. Do your own research. So when I take a look at that, as far as dollar cost averaging, as we start to slide down and I see these multiples come in, I say, okay, well, if the MVRV Z-score is at 0.4 or negative 0.4, if it goes to negative 0.5, I will increase it. I will double it. So instead of being at 25%, I'll go 50%. And then as it goes lower, I'll start to do what's called dynamic DCA, and I'll kind of get in that way until I hit this bottom. And then as we start to go up, you can kind of look at the charts and just go, well, now we're in this normal range, and I will go back to my original one. And then to answer your question about do I DCA into Bitcoin only or into altcoins? We have this show called DCA. It's a live show once a week. It's me and James from Invest Answers and Ben from the Cryptoverse, and it's pretty funny because we're all on this spectrum. So like James is over here and he's like, I just buy. He goes, I think this is the bottom. I'm going to keep buying and buy a bunch. And then Ben's over here going, I'm only buying Bitcoin and sometimes not even Bitcoin because I think that cash is king. And I'm just going to stick out because I think there's going to be some major pain coming. And I'm kind of in the middle. I think there's some pain coming, but I'm like not 100% sure. So I dynamic DCA, I pull it down a little bit. And I also spend a little bit, even less than I do on Bitcoin, into the alts. Because if anything's going to crash harder, it's going to be the Solanas, the Chainlinks, the Polka Dots, the Cardanos. Those are the ones, and that's just the top 20. Don't get me started farther than that. As farther you go out, the more you're going to see pain of like 90% drops from all-time highs, 95%. So for those, I buy a little bit because I'm never 100% sure. And I don't think anybody really is. So I just kind of play that hedge against it because, hey, maybe I'm wrong. But if I'm right, well, then I'll just buy them on the way down.
Love it. I think I sit exactly where you are on the spectrum between Ben and James. So, yeah, that's what we say. Like, there's no guarantee that there's going to be a final capitulation to the downside, just as we don't know that we're going to form a double bottom formation and start working our way to the top side. So the best investor and the best trader, like when I learned from traditional finance, was you be prepared for both scenarios. And unfortunately, when you're a content creator like you and I are, often you're said, oh, why are you sitting on the fence? But it's not about being sitting on the fence. It's about being prepared for either outcome and having a pragmatic approach to up or down. And that sounds like what your dynamic DCA allows you to do.
Yeah, and I got to tell everybody who's watching the video, the hardest thing is, I think the easiest thing is to buy. And the hardest thing is well, I guess the medium hard thing is to sell. But the hardest thing is to do nothing. Is just to sit there and be patient and look at charts and just wait and abide your time. I know it is because I'm doing it right now, but it sucks. But if you have the patience, the payout is much better just sitting on the fence and just going, okay, I gotta wait. Okay, here's my opportunity. And you take the best of the opportunity when that time hits. And then you start to, get into it and buy. But if you don't, it seems like a lot of like we were talking about the Moon Boys, like they want to dump much money into it, meaning that they think, oh, it's going to go up if I dump money into it. No, you're just going to lose. It's just going to go down. Now, if their time horizon is 5 or 10 years, it really doesn't matter. I think they're going to be pretty good if they dump into the right projects. But I mean, it's all about your time horizon.
Yeah, and you got to be careful with these Moon Boys. Like, you don't know what they're doing. You don't know where their money's coming from. I don't think it's necessarily coming from direct crypto trades. And you see that they're holding these trades for 6 months, like where it's like 10K up, and they're on the same trade which they've left over for 6 months. So yeah, we'll park that there. But in terms of what you were saying there, again, it comes back down to having wisdom, right? It's about having seen the movie before, and that gives you the patience to, like you said there, sit on your hands and do nothing. And literally, we said that to the community today, which is just, I'm doing nothing today. There's a bunch of green candles on the charts. I'm not chasing green candles. We call it green candle disease on our channel. I'm not going to have green candle disease. I'm not going to chase it. Just sit back. The bears are still in control. Let it play out. Sit on your. My mentor used to say in terms of startup and venture capital, sit on your hands. And he started to say, "What do you mean?" He said, "Just sit on your hands. Do nothing. Worst times will come, and you're going to thank me for it then." And I guess that's the wisdom that comes through, isn't it?
Oh, but it's so hard to do. It's so hard to do because we've been. If you came in 2017 and beyond, actually, whenever you came into crypto, you heard this same mantra, which is you've got to buy the dips, buy those dips. You've got to hold on for dear life.
Sell the rips.
Sell the rips if you can do it. But then you get that the disease called greed. And before you know it, you're sitting on these enormous bags. And you're thinking, oh, I got to buy the next dip. And before you know it, you're just holding these just unvalued assets as they just kind of sit there and languish. And I understand that some people say, well, Rob, you don't get it because like the whole point of crypto is to buy and to hold and to use that crypto for goods and services, thing like that. I'm like, you can do that, but if the goal then is to acquire as much Bitcoin, Ethereum as you possibly can, why wouldn't, as things go up, you start to take profits? Because it's never going to keep going up forever, and it'll never keep going down forever. So why not just take some profits along the way? What everyone broke taking profits.
And ultimately, that's one of the challenges we have in this space is everything's binary, right? We're either going to zero or we're going to the moon, and there's no logical, pragmatic in between ground where it's like, oh no, really, we're probably going to go between 20 and then try to work our way back to all-time highs. And if we had less of that euphoria at the top and fear at the bottom, and we could just strip out that emotion, like you said, then we'd all be great investors. But that's the difficult bit. That's the psychology piece.
That's the psychology. And then you have to understand that, of course, everybody watches this video. Even I fall victim to that greed train, where I'm like, oh, it's going up. I think it can keep going up. It can keep going up. But then you have to slap yourself in the face and go, that's dumb. You've already been through this many times, or you've heard this same story many times. It's the same ending. So just remember, at some point, the market gets overheated. You have to take some profits. You have to take something off the table to reduce your risk. It's not how much you make, it's how much you keep. And to be able to do that is to actually look at the risk versus reward and go, you know what, this is the time.
And so on the topic of taking profits, you spoke about your dynamic DCA approach in order to get into the market. Do you have a similar approach of taking profits, or like we say, trimming your profits?
Yeah, so there's a couple of different ways I've done it over time. The first way that I did it, this was, well, first of all, in 2017, I didn't take any profits. I was like, I'm just going to write this up because John McAfee told me that Bitcoin is going to 1 million. And,
yep.
you know, yeah.
I made the same mistake, guys. Made the same mistake.
See, yeah, you have to learn from mistakes, but they don't have to be your mistakes, right? Yeah. So what I did for this last bull run, I said, okay, I am going to take a look at where I think the prices are going. I'm going to take a look at fractals. I'm just going to overlay where Bitcoin was in the bull cycle of 2012, 2013, 14, 15, and then where it was 2016, 17, 18, 19, and where I think it's going to go from there. So I took fractals and just go, okay, I think, and the conservative number I came up with was, at first it was 100,000. I go, I think Bitcoin can hit 100,000. And then I got a little bit too moon boyish and I went to 150,000. But I chunked it up into 5 blocks. So I said, okay, I think it can hit 40,000, check. I think it can hit 60,000, check. I think it can hit 80,000, no. I think it hit 100, no, and 150. So what I did was I sold 20%, 20%, and the next one I never hit. So I sold it along the way at these big chunks. I did that for actually all of them, for Bitcoin and Ethereum. Ethereum I thought was going to go to 10,000. That wasn't right. Theta I thought could go all the way up to, I think it was $15, and it pretty much hit that. Cardano I thought it could go to $3. It hit that. EOS I thought it could go up to $30. That totally didn't happen. And another big huge miss was my VGX one. I thought that could go to $30. It went to $7. So I took very little profits along the way. I mean, just for some of those, but the other ones I was okay. I took that, rolled into my favorite, which is real estate, and just kind of wrote it from there. Now, for this next one, we just put out a video this weekend, and what I took a look at was, I just talked about, like, what kind of trader are you? And first you have to decide what that is, right? Are you a scalper, which is like you just hear a couple of seconds and then in and out you go? Are you a day trader? Are you a position trader? Are you a long-term trader like myself? And if you're a long-term trader, then what I take a look at is, I said, let's just take a look at where the cycles are going to go. So again, the same, I took a look at the exact same charts. Well, this one though was Pi cycle top, NUPL, and then there's a new one called Time and Risk. And that's the one that I stole from Ben's website into the Cryptoverse. And I highly recommend that one. It's a paid site though, but it works pretty well. And I took a look at the 2-year moving average, the Puel multiple, and reserve risk. I took a look at all those things and just said, this is what you're looking for as far as when things are, it gets overheated. And it's very simple on looking at Bitcoin. If it's in the green zone, it's probably a time to load up, and if it goes into the red where it's overheated, it's going to be time to take profits. So I'm waiting for this time frame. Now, if something happens within this, what I like are the 4-year cycles. If it starts to really get heated, like if Bitcoin goes from, what are we at today?
19-ish. Yep.
Shocker. Yeah. And then if it doubles up, that's an easy play for me, because all I got to do is go look. It went from 19 to 40, or let's say 20 to 40,000. I'm going to take my initial investment. I'm going to take it off the table, and I'm going to let the rest ride. And then as it goes down, I just take a look at the charts and go, wow, here we go. MVRVZ score is below -0.4 again. I'm just keep buying at this point. It's the same thing that wallet number 3 does. It's very simple. And then just go from there. But what I'm trying to hopefully hang on to is the next big run up, which I think hopefully will happen in 2025 if we're remotely correct, but it could be longer.
Yep. And for everybody listening, I guess the important takeaway from what Rob's just kindly shared there with us is it's about having a plan. You may not necessarily have the exact same strategy that what Rob is using based on the on-chain metrics or Puel multiple or MVRV score, but maybe you have another on-chain metric or an indicator or something from a macro chart that you want to follow, and you have the same strategy to be trimming. So as long as you have some sort of strategy to be taking chips off the table, I'm guessing that's the message you're trying to drive home.
Yeah, take them off the table. Some people just say like I did the video and some people said, Rob, just use what is it? Not the risk assessment, but the fear indicator.
Fear and greed. Yep.
Fear and greed. Just so he says, some people say when it gets really greedy, then time to take profits. So when it goes below to extreme fear, then just start to buy back. I'm like, you can do that too.
It works.
It works.
And I guess by having a plan, you're just stripping out the emotions. That's the key. There's no magic in a specific plan. It's the magic of a plan, and stripping out the emotions and having a formula which says you have to take profits, regardless if every single moon boy is telling you it's going to 200,000. Your formula says take profits, therefore follow it.
Yeah, you know what? There's a great one. It's called Pi Cycle Top, and if you take a look at that one, I mean it's a retrospective look. It was created in 2019, and it nailed it for kind of 2013, nailed it in 2017, and almost nailed it in the last one, 2021. It called Bitcoin on April 11th at around 60,000, somewhere around 50 to 60,000. Now that wasn't the true top, right? Would have taken till November, but you'll never, for me, like I always think like this. I don't know how you think, but I'm always thinking I will never hit the absolute top. I'm not that smart. I'm not that lucky. Yeah. And I'll never buy the absolute bottom. So if I can get like 60 to 80% there, hey, I'm good to go.
Exactly the message we try to drive home, honestly. Like, just it's not binary. You're not going to catch it at the bottom. You're not going to get it at the top. Just be generally directionally right, and you're going to be okay in this market because the returns are that crazy. So I wanted to pick up on an interesting point you did mention there. So when you were talking about taking some chips off the table, you mentioned that you rolled them out into real estate, which is really, really interesting. So two questions, really. One, why real estate? And two, do any of your profits from the crypto space get rolled into more crypto? And if not, then why?
So for the profits for this one, we're still, I feel that we're still in a speculative assets. And we're taking a look at the speculation of crypto, and it can work pretty well. And I got to tell you right now, if President Joe Biden comes out and says, guess what, we're using Bitcoin as the world reserve currency, probably not going to sell it. Just telling you right now, I'll probably not do that. But for real estate, I've been investing in real estate since 2005, and it just kind of makes sense to me. First of all, there's some nice tax advantages to it as far as the depreciating assets or the depreciation as it goes forward. And then another thing is that it's flexible what you do now, because there's this great sites called VRBO or Verbo and Airbnb and a host of other ones where if you purchase a property, like I'm not a flipper. That takes a lot of stress and hard work. Yeah. It's not my thing. I like to do is I like to buy the property and then say, okay, first of all, we always think, is this an area where there's a lot of tourism, a lot of people coming in? Then that's an Airbnb. Or is this a place where there's not a lot of traffic and we'll turn this into a long-term rental and we'll sign contracts and then we'll keep it on the books and have it appreciate. Usually things do pretty well. And thankfully, we bought we've been buying property for a while, me and the wife. And then recently, as of 2021, when the market was hot, you have this ability just to go, hey, you know what? Maybe it's time to sell some of these things because it's ridiculously priced. So let's just sell a house or two and then get that off the books and then bring that in and then wait for the next crash because we know what's coming and then just go back in. And so that's what I usually try to do. If I'm going to roll profits back into crypto, a lot of people will do this. I think this is a normal thing is they'll sell their altcoins and roll it right into Bitcoin. And you go, I just want to acquire a bunch of Bitcoin.
Yeah.
For me, I don't do that as much because I kind of feel like there's a safer play for me on
Yep.
this side. And that's just how I do things. But people do it all different ways.
Very good. And so in terms of the real estate portfolio, do you ever use any of the cash flow being generated from the real estate to fund your DCA into crypto, or do you keep it completely separate?
So I try to keep it, we try to keep it separate. And I will tell you this, I have this mentality. I don't know if we were the same, probably the same. I always think there's like some catastrophe or rainy day coming. So I always try to like stock away some cash because I'm always like, okay, this place is good, but I know there's going to be something wrong with the plumbing, or there's going to be something wrong with the roof. There's going to be something wrong with raising your taxes. So I try to like stock some cash away, even though I know the inflation is high. So I try to stock that away. And then what we do is we try to accumulate until at some point we go, okay, there's always a good deal out there. And that's either on crypto, or that's in real estate, or that's in business. There's always a great deal. I know the people that are listening to this, like, yeah, you're right. There was this great deal and I had to pass on because I didn't have the cash flow. And when those deals come, it's so important to have that cash from the side going, I got to act. And that's like, so right now I'm just sitting on cash. And like we say, cash is king. I want to say the dollar is king. I'm not sitting in pounds.
Lucky for you.
I'm sorry, man. Today's a bad day for you guys. I feel bad, but yeah, I just sit on dollars, and then just kind of go on, because you never know when the next big thing comes about. And I always feel like there's a crash coming. Maybe that's just me, but I think that if you have it on the side, you have that, like, you can breathe.
That's what the experience teaches you, right? I guess, I mean, from everything we've been speaking here over the last kind of 25 minutes here, Rob, it's just what's shining through is your wisdom through your experience. And I think that's the key message for the community, really, which is you don't have to really go for those. You can pick them up by learning, by listening to interviews like this, by studying the past markets, because guess what? They don't repeat, but they certainly do rhyme, right? We will get another crash, and then we will get another bull run, and we will get another crash thereafter. And being prepared for those really does help you out in those situations. Cool. Yeah. So you spoke about the pound. You started this. I was going to avoid that topic, but I remember being able to divide by 2 when somebody told me a dollar amount. So, but now, yeah, we're at parity. So I'll have to give you that, Rob. It's been a painful day. But speaking of that, so we covered that on the channel. Look, you got the dollar index ripping through the roof right now, right? Dixie really is showing a lot of strength. What's your take? Do you see it cooling off significantly at any point? I don't just mean like a reversion to the mean. When do we see the next big correction in your mind?
Gosh, I don't, I never saw the British pound going that low. Just like you said, you divide by 2, and that was pretty much it.
I didn't until Liz Truss came into power.
That's, you know what? That's the thing. That is the big issue. It's just about leadership and government. And the ones that come in, some new individuals come in and it spooks the whole market, and they make some funny calls, and there's some funny things going on, and then people, they freak out, and then off they go. And then
but can you imagine, Rob, we're sitting here on worse inflation than the US. So we obviously cover what's going on in the US. Everybody's still annoyed with Jerome Powell. He's not pulling the band-aid off. We get it. He's kind of, walking around on his tippy toes, not getting the job done. But here we're sitting at worse inflation in Britain. And on top of that, they've just done 50 basis points. And then they go announce, a whole bunch of other, things to help with the energy crisis. So they're still stimulating the economy. It's insane.
It's insane. You raise rates, but then you stimulate the economy. And I know, like, there's this website I use called Truflation, TRU, Flation, FLATION.com. It's 100% free, and it uses Chainlink as an oracle to pull in outside data for real time inflation rate data. And for and there's two countries. There's the USA and there's the UK. And USA, I mean, when our government was telling us it was 8.5%, like Truflation was saying, no, it's 11.9, almost 12%.
Yep.
And then if you do a drop down to the UK, you can see that over the last year, I mean, you guys were like reasonable at around 3%, and now it's looking like 16%, something just ridiculously highly priced.
Yep.
So like I look at that and I go, see, these are the things that really concern me globally. And there's a lot of, I mean, the macro factors and the optics of what's going on. Because remember, in crypto, Bitcoin was 2009. That was after the housing market crash. And then, there was a recession for the last 3 years before that, or 2 years. And then we just had a big economic boom. So crypto was able to ride that for until now. And now here we are we're at an impasse. So the question is, and people always say this, Bitcoin's never been through this. And they're right. So I'm just curious to see if the 4-year cycles will hold up. I'm curious to see like when the dollars, because I have no idea as far as like the Dixie and when they're going to stop ripping. But it's insane to look at it that over the last 6 months, I mean, you can take a look at the Dixie. It was at 98.31 on March, and now we're at 114.06 for the dollar index. That's insane.
Yep. And look, I mean, so I know for the British pound, we're now at the lowest level we've been at to the dollar since 1985.
Yeah.
So talking about a situation that Bitcoin's not seen itself in, I mean, and some, right? Like this is a long time. This is going back a long time since the economy has seen something like this, the global economy.
Right. Oh yeah. So here's what I was thinking about today. I was like, you know how we think that there's smart money and smart money's in the market, you know, because they know what they're doing. Like the longer I'm in here, I think myself, I think there's just a bunch of dumb money just hanging around, because like there's a lot of times when I'm like, okay, you know, Jerome Powell comes on and says, okay, 75 basis points. Well, we know it's gonna be 75 basis points. Yeah, I mean, we had a drop in the NASDAQ, a drop in S&P 500. I mean, crypto drops by 100 billion. Like, weren't we just talking about this? Is smart money really there, or is smart money, or some people just say big money, it's just waiting, going, okay, dummies, just do your thing, which is panic. And then we'll wait and we'll buy it on that low point.
Absolutely. And I guess the one thing that smart money is flowing into right now is the treasuries. Treasuries absolutely ripping. And for now, to be sitting on a 10-year US Treasury note and getting close to 4% risk-free, it's a super attractive proposition, isn't it?
It is. And then I think we invert not too long ago, the 2-year and the 10-year. So I'm pretty sure once that happens, it's an indicator of an upcoming 6 months to 18 months, I think.
Yeah. And look, and this brings me on to my next kind of point I wanted to discuss with you, because we know that we had the Q2 US GDP figure come in negative, officially a recession, and then Joe Biden and his team want to come out and start playing around with the definition. What's your experience? Obviously, slightly UK audience here as well. What's your experience in terms of when the elections start to happen? What's your thoughts around that? Do you think there's going to be a bit of pandering to gain some votes? Do you see a little rally happening towards that period in the stock markets, and maybe Jerome Powell letting his foot off the gas a little bit more? What's your thoughts around that? Have you got any experience from that in the past?
There's always, first of all, America's great because the corruption's just out there in the open. Everybody can see it. It's just fantastic. And so it's always pandering to the audience and making these great deals. And that's how it's going to go. I will say this, though. Like, there's this old adage, and you know it, sell in May, go away. And, of course, come back in around October, November. And every time there's been a midterm election, because we're in midterm elections, right? So we're in between the presidency. It's every 4 years here in the States. So the midterm election is going to determine who's going to control Congress, Senate and House of Representatives. So Democrats are probably going to lose a lot. The Republicans are going to take a big play there, but that doesn't really matter. What really matters is that after, and there's a chart, and it goes back all the way to 1962, and it takes a look at all the different midterm elections, because usually there's like a low percentage, and then about like a month to 3 months to 6 months, and it takes a look at the percentage gains, and almost every single time there's percentage gains. And it didn't matter if we were in the recessions of the 60s or the 80s, or if we were in the high times in 2014 or whatever. It would always go up just a little bit. And some were like massive gains. So I think that once the midterms go, because I don't think there's another Fed meeting this month in October. I think
November.
Yeah. So you won't see too much. November will come around. Super Tuesday I think it's the first Tuesday of the month. Yep. Then you'll see Jerome Powell come out, probably 75 basis points. People shouldn't be freaked out, but they're dumb, and they'll probably freak out again.
Yep.
But after that, I think in 2023, hopefully we'll see a little bit of reprieve. The big question is, what's going to happen with Europe? What's going to happen with Ukraine? What's going to happen with this energy crisis? Yeah. Is Vladimir Putin going to turn off the taps and just go, sorry, no more oil? And then how bad is it going to be?
And that's the problem, right? When you look at that worry wall, it's still full. We're still full of a lot of different worries. We still don't know to full extent what's going on with the China Evergrande issue. We don't know what's going on with Russia, Ukraine, and whether that's going to escalate. CPI still seems to be out of control. I mean, Jerome Powell can say what he wants. I mean, it's not coming down the way he wants it to come down. UK, we've seen what's happened. Europe, we can see what's going on. So definitely a difficult period. And now you've had the Fed coming out saying they want to be heading towards a terminal rate of 4.6 and hike deeper and for longer. I mean, that's going to have all of us sitting here kind of just getting ready for a little bit of a longer winter. Am I right in saying that's your mindset as well?
You're 100% right. And it always astounds me is like, Jerome comes out, it's like, look, and he only quoted Volcker, I don't know, 30 times in all of his speeches. And he's like, we're going to keep going. And people, like, I would still see the pundits go, that old man, he's crazy. He's not going to keep raising. He can't do it. And he comes out and goes, look, this is what we did in the 80s or 70s and 80s when Volcker came in. We're going to keep doing it. We're going to keep going on until the mission's done. And here's our goal rate. And here's what we're going to do. And like, he's just telegraphing it. People are still saying he's not going to do it. I'm like, he's going to do it.
Yep.
Because I mean, at some point you got to just say, do I want to deal with a recession or a full out depression?
Yep, exactly. And that's the decision he has to make. And I think the recession we're already in, and whether we're in a deep recession or a depression is probably what's at debate here, isn't it? So
what do you think? Do you think we could actually hit a depression? Global?
I said this very early on, that I called it out as a bit of a kind of just a hit out there that this could be a depression. It just doesn't feel right as a normal recession. I think the narrative might now switch across to a double dip recession. So the double dip being where you're 2 quarters in a recession, fine. Then you have a positive quarter of growth, somewhat. You scrape out a little bit of positive growth. Who knows who's playing with the numbers, right? And then they show another quarter. So instead of showing 4 negative quarters consecutively, which they can then say, oh, that's a depression, they'll probably eke out to give you 1 positive one to say, oh, it's a double dip, right? So that's kind of the narrative I'm looking out for now. Yeah.
That's very smart. If I was, I don't know, the president of the United States and I wanted to, I don't know, booster up my chances of getting reelected, I'd be like, you know what, guys? I avoided a depression. We did our job. We put everything in. And we just double dip. So
just a double dip, just a cheeky double dip.
Oh,
exactly.
That's a good one.
Yeah, so that's where we sit today. Okay, so I wanted to kind of change tracks, if that's okay. Are you currently based in Puerto Rico? Because I wanted to talk about tax.
Taxes. So me and the wife live in Puerto Rico, but we vacation in Texas. And right now we're in Texas. And we come to Texas. We get here around April or May, and we leave at around around the 1st of October. Because we do that because we do this it's a charity obstacle course for kids, and we give all the proceeds to the Boys and Girls Club. So we do that. We have one just coming up. That's why I'm so tired and a little bit more red, because I've been outside doing construction work with the guys. And then that'll be this weekend. So right now we are in El Paso, Texas.
Got it. And just baby steps really for the community. One of the things we start to come across, obviously in this crypto space, is you oftentimes find people who've run into a decent lump sum of money in crypto, and they've never kind of thought about or planned for their taxes. What would your non-financial advice / starting point be for somebody who's kind of starting out in crypto, starting to get into some serious amounts of money? What would you say is their go-to to start thinking about? What should be on their kind of peripherals?
So we talk about this, we didn't talk about this in the video this weekend about taking profits in the next big bull run. One of the things I neglected to mention was taxes. And I got a bunch of questions, so I'm glad I can answer it here. Because some people said, Rob, aren't you worried about capital gains tax and how much you're going to have to pay on that with these massive gains that you and I potentially will happen? Well, first of all, you have to think of it this way. Let's just say, for example, we make $1 million, okay? And let's say that we have this crypto for more than a year. Chances are you probably have it more than a year because you're holding on for the big payday. So in America, usually it's 20% is your long-term capital gains tax, depending on the state that you're from. I don't know how it is in the UK over there, but
it's 20 to 28, depending on a few different circumstances.
Sure. Okay. So it makes sense. So 20%, and then that's on long-term. So if you hold over a year, you're good. Let's say it's short-term. For some reason, you become the Dogecoin millionaire and you put in $180,000, and in 6 months, you're at $3 million. Okay. So now you're in short-term. Let's take the worst-case scenario. You're in short-term capital gains tax, which is depending on your tax rate for whatever you're at. And that could be 25%, That could be 32%. That could be all the way up to 43%. You're a big baller, right? So, which is a lot of money. Plus, you also have to remember that that's the federal taxes. The state taxes. I live in Texas, so there's 0%. But if you're in California, tack on another 8 or 9%. If you're in New York, tack on another 6 or 7%. So let's just say a worst case. Let's say you have to pay 40% because you did a short-term Dogecoin millionaire play.
Yeah.
And you made, let's just say, $1 million. Well, yeah, it sucks. Now you have to give the government $400,000. However, actually, no, I take that back. If you put $100,000 in, that's yours, right? Let's say you made 1.1 million. So 100,000 takes $1 million. You're paying taxes. You have to pay $400,000 to the government. Yes, I know it sucks. I know, I get it. 60%. You're sitting on $600,000 plus your initial investment of $100,000. So you got $700,000 in the bank. Not so bad. Now let's take it off to the long-term capital gains. 20% with no state. You're living in a great state of Texas. You just made $800,000 and you give the government $200,000. And some people will say, well, that's just too much money. Look, if you take $800,000 and sit on it at the right time, like we talked about, like investing in yourself, maybe investing into a business that you want to do, maybe investing into real estate, maybe into whatever else that you want to do, that's a lot.
You can retire technically, yeah.
You could, it depends on where you go. If you're like, I have $800,000 and I'm going to buy a condo in New York, you're not going too far. But let's just say that you're like, you know what? I got $800,000 and I want to live in Thailand or something like that. You're living like
plenty. Yeah, absolutely. And it's an interesting point you make. Like, we find that a lot of people enter the crypto space with this kind of ambition to become a multi-millionaire, right? They're hit again by these moon boys. But very few people, and this is one of the things I used to do for myself, is run the calculation of the lifestyle you want, and you'll realize what that looks like. So run the calculation. Let's say the lifestyle you want is going to cost you $80,000 a year, right? You'll be surprised that it's lower than you think. Like, put everything that you want, the car you want, everything that you want, put it all in there, and then reverse that back in terms of if you were to invest that in the S&P at 7%, 8%, 9%, and it'll give you the lump sum figure that you need to be able to acquire.
Exactly. And it's all about what you want to do. And I'll even bring it to the next step. So in 2014, me and my wife split for a short amount of time, about a year or so. And
happy ending.
Yeah,
you back together?
Back together. Everything's
Good stuff.
good. Of course. I love her. So, and I said, okay, I'm going to get out of here. I'm just going to move to Las Vegas. And, I have my own online education platform and I had some funds in, so I have to work. So when you start to do that, you start to realize that the things that you do, like people say, my job sucks, or this sucks, or I don't want to do this, I want that. Without a life of purpose, it is the worst possible life that you can have. And I know, like, people say, that'd be awesome. I could be in Vegas, do all these things. Look, it's awesome for a couple of months. But after a while, you're like, what the heck's going on? So I know people like, I want to be a multimillionaire. But the thing you have to think about, and this happens in the military, this happens firefighter, police officers, every industry that you can think of where people retire. Once people retire, there's a higher risk of death because there is no purpose. Yep. So when you think about, I can't wait to make $1 million, and trust me, making money's fine, it's good, because it doesn't give you happiness, but it takes the pressure off. I get that, trust me, I grew up super poor. But at some point you have to think to yourself, what is my purpose? What am I here to do? How can I help people? And how can I get up and go, I have something that motivates me? And I think that is the next step for people to think about. I did a blog about this and I said, you have to think about this now before you get in that trap, because there's so many people that they win a bunch of money in a lottery and it's gone in like 6 months to a year and they're back doing the same thing because first of all, they don't know how to handle it. And second of all, they didn't really have any purpose.
No, completely spot on. And the other funny thing is I know a bunch of people who have hit sudden wealth, playing a risky trade, even back in the traditional finance game in terms of cross-currency swaps and other derivatives. Like you meet these people. And there's two things, like you said. One is, the lack of a passion or a drive or a purpose, as you described. But then also the fact that they have a bit of identity crisis because they don't have a definition. They can't define themselves as having a certain skill. And moreover, if somebody was to take their lump sum away, or if they were to lose it, which, by the way, they're statistically more likely to lose it because they don't have the same level of financial literacy, right. They're unable to replicate that. If you became a Dogecoin millionaire, the chances of you pulling it off again are minuscule. right? Whereas if you strategically dollar cost averaging and built wealth in a pragmatic way in an asset class, whether tomorrow there's a new asset class or some other thing we've never even invented yet, you've still got that skill which stays with you.
Yeah, and it's the skills. That's why, like, when we're talking about like when you take profits, what do you invest in? And the best place to invest in is yourself. Invest in yourself. The things that you can actually learn and grow. There's many purposes of life, you could say, right? I always think that the purpose of life is to constantly improve and to help improve those around you. If you can do those two things, it kind of makes life a little bit more palpable. That's for sure. So
Absolutely.
yeah, why couldn't we?
And just to touch upon the tax thing again. So, you often run into the kind of individuals who made a little bit of money in crypto, and I get these messages. I'm sure you get much more than I do, and they're saying, "I want to move to Portugal. I want to move to Dubai. I want to do this." What do you have like a rule of thumb in your head where if you don't have a certain amount of net worth, it's probably not quite worth not from a financial perspective, but from the emotional bandwidth that it takes up of actually worrying about that? How do you like to think about that? Is there a certain amount before somebody should be thinking about that?
Yeah, so I did 2 videos on Puerto Rico, one before I moved there and one a year update after I moved there. And I said, look, if your gains aren't at least $250,000, don't even bother with it.
Yeah.
Because first of all, you have to understand that just because you moving to Puerto Rico doesn't mean that everything that you brought with you is going to be tax exempt. It doesn't work like that. It's actually, if you move there with crypto, guess what? You still get taxed on that crypto. The time that you move to Puerto Rico, from that point forward, going, because we moved there in 2021, everything that we had accumulated, we still had to pay the capital gains tax.
Yep.
Moving forward, we won't have to pay capital gains tax to the federal government. However, to Puerto Rico, you still have to pay property taxes. You still have to pay all the import taxes. It's super expensive there. You also have to pay a minimum of $10,000 for charity purposes. It's just something that's been built into Act 60. And of course, you also have to work to promote the economy by hiring somebody to give them a job in Puerto Rico, which is fine with me. I've met a lot of great people over there. Shout out to Nardo and the people that work with me. But for these things, like if you're not making that much and you're not saying, okay, I'm gonna keep making things, it's just forget about it. Now I moved there because, well, first of all, my wife is originally from Mexico, so she's for sure, Spanish is perfect, mine is awful. So I moved over there and she loves it. She loves the beaches and everything else. I just want to work. That's my problem. But so when we moved there, it was like not a big thing. We want to be there. We want to help the people around there. But for some people, they just want to go there. I want to go there and save a bunch of money in taxes. It doesn't work like that. It's just like everything else. You got to plan ahead. And I'm like, I'm not going to see any gains of that until 2025 when the next cycle comes about. So don't get excited.
Perfect. So you mentioned about kind of planning ahead. So if somebody was, let's say, fast approaching that 250K kind of threshold, did you start thinking about it well before then? Is this something you have to get the wheels in motion as you can see your trajectory is heading towards it, or you start thinking about it at that kind of level?
I wish I would have, but I did not. A lot of the crypto people moved down to Puerto Rico, and I met up with some friends, and they said, they told me, they go, Rob, you should move down here, because if you don't, the government is essentially paying you to move down here. Because, and they gave me the prime example. Let's say you make $1 million, right? And 20% capital gains tax. So that's $200,000. Basically, a pretty decent condo is what they're charging you to stay in the United States. And I was like, that's true. Of course, then I went with the lawyers, who was super overpriced, I might add. That's why I watched that video, because I give you a way less expensive option that's twice as good. When you go there and you get everything done, the whole thing was, if I would have planned a little bit forward, I wouldn't have moved there so late. Now we're there, and of course we live there. It's great, but it won't take until 2025. So if people are thinking about this, look there, look at Dubai, look at, I think it's Portugal, and there's some other places, the Cayman Islands, I want to say, something like that.
Cool.
Plan B has the stock to flow ratio. There's
Yep.
there's another person, a female, who does it's called Plan B, Plan Bitcoin, and she helps you plan out your nomadic adventures
Okay.
for incentives.
That's interesting. Cool. So quick fire last few questions really. Have you come across what's going on with Do Kwon, Interpol putting him on the red list? Any thoughts on that?
Dude, first of all,
How long have you got?
no. I'm just gonna say this. There's a lot of people that somehow are not in jail. I just don't understand how they're not in jail yet. So this was bound to happen. I did like Do Kwon's tweet where he's like, "Hey, I'm not running."
I saw that. Yeah, he said I'm making no effort to run. So he's saying yeah, but clearly he's on a red list. If he's clearly hiding somewhere.
Dude, and who knows?
I guess one of the conspiracies around this is that look, he was super strapped for cash after Luna collapse. He quickly spun up Luna 2.0 because obviously there was an initial cash out for him, and he's using that to kind of run around. But who
what
knows?
do you think about this Luna Classic? Do you think it was a good idea? Do you think people are going to get hurt? Do you think it's like it could do something, or what do you think?
Yeah, I do advise extreme caution around Luna Classic. For me, it's a classic momentum play at this point, and based on social hype. And if if the community want to trade it, I've said this many times in videos, go ahead and trade it, right? But let's understand it for what it is. It's got the social element of a great project, but it's got no development team, right? And equally, the new Luna 2.0 has got all the development team because Do Kwon's kind of headlocked them across with false promises, but they've got no social element. So it's just a bit of a mess where they've kind of just split the kind of ecosystem in halves, really, and it's a difficult place to be unless they can figure out a real development team behind Luna Classic. We can't really hold it as a long-term hold, can we?
No, I don't see how people could. And then it's all about community. It takes years to build up a reputation, and it takes seconds to destroy it. And once it's gone, it's gone.
Yeah. And we covered the Do Kwon saga at length on the channel, and fundamentally, whether he was right or wrong, I guess time will tell in terms of if he had any nefarious kind of objectives. But one thing was for sure, he was not forthcoming and he was not transparent with data. And for me, that would always remain the red flag. I remember CZ at the time tweeting that this is one of the worst interactions he's had with the head of a project in terms of a disaster recovery. You probably know this in terms of working with companies and projects. You have a disaster recovery plan, right? You're communicative. You have an action. You're trying your best to recover in those 36 hours. And I remember CZ tweeting, which was quite an indictment, really, to say this was awful. Like there was no communication, which makes it, which adds flames to the fire, or that there was something more nefarious going on. But time will tell. Time will tell on that one. The best thing for the community to do is just be safe. If you're playing the Luna Classic game, please understand, it's a hype machine right now, and just be very, very careful.
Yeah, I will tell you, everybody. I know people in Puerto Rico who retired off of Luna. They were VCs, and they tell me, they said the best thing that ever happened to us was a Luna Classic because we were dumping like crazy. That's just how it is.
Yep. And that's the other thing. You've got this constant up pressure of people just dropping their bags. So even if the Luna Rebels do a great job of pushing the price up, there's so much downward pressure with people just throwing their bags at different price points. Like you said, the VCs and other high net worth individuals going, oops, thank you. This was a write-off on my balance sheet. I wasn't expecting any of this back, let alone 5% back. And they're just cashing it. So that's the reality of it. And guess what? It's sad because guess who's getting hurt? It's the actual Terra Luna rebels who actually believe in the mission and they're behind it. They're putting their life into it. There's so many volunteers trying to build the Terra Luna Classic, ecosystem right now and giving their hard-earned time and efforts. But yeah, you've got to be a bit of a shark at times as well and understand at least what the game is, because otherwise you're going to get burnt.
Yeah, well, it's a good thing. It's a good thing there's shows like yours that can accurately describe exactly what's going on, so people can go, oh, maybe that's not a good idea to follow a TikToker because I think it's going to go to $100 tomorrow. Yeah,
Rob, absolutely appreciate your close to an hour today. I know you're super, super busy, so thank you so much for making the time to jump on the channel and share your insights with the community. Any parting words? Where can people find you, even though they probably already know? And I'll leave the link in the description.
If they want to find me, there's two places. It's the YouTube channel, Digital Asset News. But also I have a website. It's 100% free, danteachescrypto.com. And I put all the things that I think everybody should know, the basics, right there. So we go over how not to get scammed, how to use a ledger, different projects. We take a look at how dollar cost average in and dollar cost average out, and the things we just talked about, MVRVZs and all those different modules or different charts to go over. So,
absolutely.
Yeah.
And guys, you guys know I'm so vehemently against any moon boy, so you're in super safe hands if you go and watch some of Rob's content. Some amazing content there. Definitely a lot of the stuff we cover off here in terms of on-chain metrics. You're gonna get the macro stuff on top as well, and you're really in a safe pair of hands. So definitely make sure you're subbed over there and absorbing some of that content to diversify your sources of information and research. Rob, thank you so much, and I'll see you in the next one, mate.
All right. I'll see you guys. Thank you so much. Bye.
Cheers, Rob. Take care. Bye.